Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are pointing to a sharply lower open this morning as the conflict in the Middle East intensifies. Brent crude oil hit $85 for the first time since July 2024, and bonds fell. The U.S. closed 2 Gulf embassies following drone attacks, including one in Riyadh. It has urged Americans to leave the region now. Secretary of State Marco Rubio said the next phase of the Iran war, quote, will be even more punishing, end quote. And here's what else is on tap this hour. Crypto platform Kraken is integrating with ICE Chat, operated by NYSE parent company Intercontinental Exchange. Kraken's global head of institutional will join me here in studio to take us through how this opens a direct line into institutional workflows. Meanwhile, Lindblad Expedition Holdings says it's seeing a surge in popularity for expedition travel. Following its latest earnings, the company's CEO will tell us what's behind the recent momentum. And at 9:30 Eastern, Sunbelt Rentals will ring the opening bell to celebrate its NYSE listing. On Monday, shares of SUNB rose by more than 1% on its first day of trade. But we begin with the markets, where investors are monitoring a slew of storylines. Joining me now is Will McCoff, CIO at Prime Capital Financial. Will, welcome.
Thanks for having me.
So how is the conflict in Iran affecting your investing strategy?
So that's a great question. We've been telling our advisors and clients going back to late 2024, expect more volatility coming out of Washington, D.C. And 2026 is really shaping up to be the year of geopolitical volatility. We had Greenland, Venezuela, now Iran. And so I think it's just expect volatility, which means you need to kind of core up your portfolio. Don't have growth overweights, be diversified in the small caps and international, and bonds certainly play a role right now too.
All right, and why do you feel the situation in Iran is presenting a heightened level of uncertainty to the market?
So what we saw was a pretty big sentiment shift overnight with regards to how the markets are reacting. I think most folks thought it was Venezuela all over again. It's going to be short and quick. But the temperature changed with the bombings or the drone attacks in Saudi Arabia embassy. So I think market participants are expecting a little more drawn out conflict here. And we've seen poly market odds come down for an April ceasefire from like 67% to under 60%. So market participants are preparing for a longer drawn out conflict, which could raise oil prices, which could affect inflation, which could affect rates and what the Fed's doing.
All right, and prior to the conflict in Iran, markets experienced choppiness due to questions about AI. Why is tech feeling more pressure now?
So in my opinion, what you're seeing with AI and Anthropic is a real-time re-rate of some growth stocks, i.e. software, to more core or value stocks. If you look at the S&P 500 growth and value, there's Mag 7 scattered across both of them. And so I think it's a hardware versus software conversation right now, with software becoming less growthy and potentially some IPOs filling that growth bucket later this year.
All right. And what is your outlook for when you say IPOs for the IPO market in 2026?
So it's probably the number one question we get from clients and advisors is, how can I invest in SpaceX? It's a private company. We do offer private investments, so it's a little more difficult. And so I think SpaceX, XAI, potentially IPOing this year, Anthropic, potentially IPOing this year, it's going to be two-pronged. It could either be private investors looking for exit liquidity and a sign of peak sentiment in the top, or they could be the new growth vehicles. Everybody thought that the top was when Google and Facebook IPO'd, but those turned out to be pretty good public market investments. So I think you'll just have to manage the risk in real time as it happens.
All right, and we understand you see opportunities with diversification, something you said hasn't been true for 15 years. Can you elaborate on this?
Yeah, so we've seen a very concentrated S&P 500 with the Mag 7 controlling like over 40% of the S&P index. So as that broadens out, small caps have caught a bid this year. International has been in vogue for better part of 18 months, and on the back of the Sell America trade, capital flows, weak dollar. And so I think it makes sense if you look at how expensive the U.S. is to diversify away from that. You're starting to see there's two things that control index values: earnings growth and multiples. And you're starting to see multiple expansion and earnings growth come online internationally, which is attractive to investors right now.
All right, and what sectors are you seeing as prime buying opportunities right now?
Again, I would probably be less sector specific, but if we had to get into sectors, the electrification play is big. We like Nextera, NE, Eaton. There's an ETF called Volt, which is interesting because it combines utilities and energy. So I think it's a two-pronged now where you get kind of a hedge from AI data centers, but also a geopolitical hedge, so to say, with energy prices going up, energy companies should benefit.
All right, and what advice are you giving clients amid the recent uncertainty?
Yeah, so it's tough. I mean, with geopolitical uncertainty, it's typically temporary. Markets maybe pull back 5, 6, 7%, and is it really going to affect the earnings growth of the S&P 500? Something prolonged could. And so I think it's all about staying the course, staying diversified, and not having overexposure to the expensive areas of the market right now.
Do you think there are any headlines that are kind of like flying under the radar that you think might make a big splash in 2026?
So Iran actually kind of flew under the radar. I think that's why we saw a muted reaction yesterday. But behind all the private debt BDC cracks and Anthropic killing software, you were starting to see the militarization ramp up in the Middle East, kind of as a third story there. It's now moved to the top. And so now that that is dominating the headlines, you kind of have to look a layer below and continue to monitor how the private debt situation is doing and where those cracks may be. And that's going to ultimately be something more systemic if there's a credit crunch. I believe Jamie Dimon was out yesterday still warning about a potential upcoming credit problem. Credit spreads are starting to tick up. Rates are starting to tick down. So the bond vigilantes are starting to be vigilant, which you need to pay attention to. So again, I think it's the growth story. Bassett was out there saying 7 to 8% nominal GDP growth. He may be right. It may just be real GDP growth. So we have to watch inflation, watch what the Fed's going to do to ultimately see if this lofty GDP growth expectation from the administration hits or not.
And yeah, GDP data recently came out. What was your takeaway from that?
So it's hard to say with the government shutdown, like how much that effect had on it. One thing I like about Washington, D.C. is they're very literal. Like what they say is what they do. And so you kind of have to take what they say. 7 to 8% GDP growth is huge. And now whether it happens or not is TBD. So we're going to be watching that. But again, I think with energy prices going up because of the conflict, you have to watch current inflation readings. And you still have this whole weird labor backdrop as well with the K economy of AI taking jobs away from folks. So it's going to be an interesting close this year. I mean, we've got 9 months to go, and it's going to be fun watching and investing alongside. And
I can't let you go without asking about the Fed. What are your predictions for 2026 in our last minute together?
So it's, again, it gets back to Washington, D.C. They won't lower rates out of the administration. So you have to think that pressure is going to flow through to Fed policy. And, it's interesting that Wash still hasn't been nominated. It's like, what's the holdup there? But the Fed's a great topic. It's probably going to be a few cuts this year, barring some type of inflation spike. It may be more than a few cuts, but if the economy gets stronger, it may not be cuts. So it's all this multi-level game theory as to what they're going to do that you could play. But at the end of the day, the administration wants lower rates. So I think that rates are going to go lower.
All right, Will Mikoff, CIO at Prime Capital Financial, thank you for joining us.
Thank you.
Coming up, Kraken is integrating ICE Chat operated by NYSE parent company Intercontinental Exchange. An exec tells us why it made the move next.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. In February, crypto platform Kraken announced that it connected with ICE Chat, operated by NYSE parent company Intercontinental Exchange. The integration paves the way for communication between institutional trading desks and Kraken's OTC desk. Joining us now with more is Gurpreet Oberoi, Vice President and Global Head of Institutional at Kraken. Gurpreet, welcome to the New York Stock Exchange.
Thanks for having us.
All right, so how does the digital asset integration in the ICE Chat platform work?
You know, Kraken is one of the world's long-standing OTC desks, I think over 13 plus years. It now allows ICE and all its participants to access Kraken's deep liquidity direct through chat with best execution, custody, financing, all integrated into one.
So if I'm a user, what is that experience like for me?
So if you go in the ICE Chat, say you want to buy Bitcoin, ETH, any of our product suite, it basically pairs up to a prime execution, which executes across 17 plus venues, and with integrated financing, custody, depending on the use case you want, and with seamless execution over chat. So all of ICE's participants, over 150,000 participants, which work with ICE Chat, can now execute through us in a seamless chat format, where the backend from Kraken's OTC desk handles prime executions, custody, financing, delayed settlements to accommodate for the client needs.
And Kraken is a digital asset platform. Can you take us through Kraken's offerings and services overall?
Sure. I'll speak about on Kraken Institutional. Kraken Institutional is one of the, as you mentioned, we had one of the first OTC desks in the digital asset space. Right now, we're live in 90 plus countries. We offer a qualified custody solution, prime execution, credit. We also launch yield solutions, where basically we allow clients to get yield on their digital assets, Bitcoin, Ethereum. We have the deepest liquidity for stable coins, where I think we're probably one of the deepest liquidity for stable coins in the world from an exchange perspective.
All right, and how will this partnership between Kraken and Intercontinental Exchange open the door to expand this integration across additional initiatives?
This allows, this is one of the few examples of TradFi and crypto merging, where the digital asset rails and the traditional finance rails are integrating. We're seeing this across many for a lot of institutional companies such as Deutsche Börse, et cetera, also leverage our rails. So what this means is now traditional financial firms can access deep liquidity from the digital asset space, and allows digital asset companies like ours to also leverage ICE's infrastructure and 150,000 plus partners for a smooth transition and execution.
And what types of conversations are you having with institutions at the moment in terms of how they're looking to integrate digital assets into their infrastructure?
I think right now, in the past few years, it was an experiment, now is happening. So tokenization is, I think, one of the big initiatives for 2026. We're seeing every large institution, asset manager, wealth manager think about and figure out execution plans and how to leverage, how to build tokenization platforms to leverage crypto distribution, and also how to leverage digital asset firms like ours to provide products and services to their clients. So if you're a wealth manager at a big bank, you're seeing a lot of their clients run off to crypto exchanges to execute and basically take their money off platform. A partnership with a firm like ours, we provide the full back-end infrastructure, where a bank right now can provide seamless buy and sell, custody, financing solutions to their clients and keep their assets on their bank and their wealth management platform. So the convergence, we're seeing, look at Kraken as the infrastructure layer. When banks, traditional institutions want to enter the space, like this ICE partnership, we basically provide the back-end technology to allow them to execute. And, whether it's from wealth management, it's from ICE, where 150,000 participants could access Kraken's liquidity from its OTC desk for prime, custody, and financing. This applies to, I think, the global world. We're seeing this in the US, in Europe, in the Middle East, and we see this adoption to increase exponentially.
And how does embedding crypto into workflows impact investing habits?
It makes it more seamless, right? For example, you can borrow from you can cross-collateralize from equities to commodities to crypto. Basically in the past you need 5 accounts, one in Kraken, one in NYSE, one in different institutional venues. Now all the integration allows cross-collateralization, seamless execution, and I think every institutional firm has to offer this service now to stay competitive.
And what headwinds or tailwinds in the near future do you believe might impact the price of Bitcoin most significantly?
I think, Bitcoin is, it has a large capital markets, and anything with large capital markets sees ebbs and flows in, volume coming in and out of it. So we see, if you zoom out, this is cyclical. We don't see any macro tailwinds to suggest Bitcoin has stayed on a longer downward trend. We can't predict the price of any commodity, but what we see going forward is tokenization is happening. Every large financial institution is adopting blockchain technology, adopting the rails of this technology, and we see exponential growth, across tokenized equities, which we launched and Kraken with backed, and just traditional digital asset custody, which Kraken offers, and all of our other services.
All right, thank you, Gurpreet Oberoi, Vice President and Global Head of Institutional at Kraken, for joining us at the New York Stock Exchange.
Thank you for having us.
Coming up, our next guest says her company's latest earnings prove expedition travel is gaining in popularity. She's going to share the details next. But first, here is a closer look at how NYSE parent company Intercontinental Exchange is using data to help clients make the best decisions.
Across global markets, data underpins every decision that is taken. For market participants, access to data and the ability to analyze it means a critical edge. At ICE, we provide quality data and analytics across multiple asset classes, from fixed income, energy, commodities, and equities, to areas like climate risk and the entire life cycle of a mortgage. To help inform trading decisions, our pricing and reference data covers millions of instruments and allows ICE to offer innovative content like our continuous evaluated pricing and trading analytics. We specialize in pricing complex asset classes. And in derivatives, our data spans OTC markets, providing tools for valuation calculations. In fixed income, our data can help reimagine your workflow from pre-trade analytics to execution and risk management. In energy, our oil and natural gas data is used by global traders, while our energy transition data helps navigate the shift to a low-carbon economy. In mortgages, our data covers the life of a loan, from origination to secondary markets, helping boost efficiencies in a sector that lacks centralized and timely data. We can meet your data needs wherever you are, with delivery via our desktops, feeds, APIs, and cloud-based solutions. Whether it's pre-trade analytics, pricing, or post-trade reporting, our data can offer a foundation for sound decision-making, helping market participants to manage risk and spot opportunity.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
back to NYSE Live. Lindblad Expedition offers immersive cruises across all 7 continents with more than 100 itineraries in 70 countries. And it recently released its 4th quarter earnings. Joining me now is Natalia Leahy, CEO of Lindblad Expeditions, here to share more about National Geographic Lindblad Expeditions. Natalia, welcome.
Good morning, Ashley. It's great to be here with you in a very early, bright and sunny Seattle.
Yes, welcome. So this year marks 60 years since the expedition to Antarctica that you say sparked modern expedition travel. How has the category evolved since that first sailing?
Well, let me start with that first sailing. So it all started on January 23rd, 1966, when the father of our founder, Lars Erik Lindblad, and 53 adventure travelers embarked on the very first non-scientific expedition to Antarctica. We often refer to it as a voyage that started it all. And Lars Erik Lindblad is often referred as a father of ecotourism. And we believe that's absolutely right, because that voyage, and he repeated the first non-scientific voyage to Galapagos a year later, really gave a birth of this one of the fastest growing travel categories in the world today. And we as a company take it not just as a pride of heritage. We really do believe that's one of our differentiator and a competitive advantage, because when you go to the end of the world, experience and expertise matters. Much has changed since then. As you mentioned, we today are going to all 7 continents, to over 100 different destinations. Our ships are much better equipped to take you closer and deeper and purpose-built for the environments we're exploring. We have one of the most experienced and talented team of navigators, captains, naturalists in the world, unique and distinct partnership with National Geographic. But one thing that hasn't changed is that fundamental belief in a transformative power of travel. We always have been guided by that North Star, that by taking people to some of the most awe-inspiring places in the world, we fundamentally change their view of the world and the relationships with each other.
All right, so you just released your latest earnings report, Q4 earnings. What should investors take away?
Oh, well, listen, this is one of the fastest growing categories. It's been for quite a while, and it will continue to be. We as a company take particular pride, especially as we celebrate 60 years of expeditions. 2025 for sure was a fundamental record-breaking year for us, and it starts with our guest experience and our North Star, as we say, because in 2025 we celebrated the largest number of guests traveling with our brand ever, and the highest guest satisfaction score. But the financial results have followed. We have delivered a record revenue, record yield, guests per night. We have delivered record EBITDA and margin expansion growth, and significantly strengthened our balance sheet through 2025. And it wasn't by coincidence, it was very intentional. We have laid the foundation for sustainable growth of the future, clearly defined our strategies, which has 3 pillars. I communicate every earnings call. It's number 1 is focus on our revenue generation through pricing management, occupancy, and fixed assets utilization. Number 2 is innovation around costs. And number 3 is accretive growth opportunities. In 2025, we added 2 ships in our Galapagos fleet, and we did a couple tuck-in acquisitions, and we expanded our charter capacity.
All right, and you say your company takes pride in unique connections with the places you visit. Can you tell us more about that?
Well, as I tell you about that, Ashley, let me start by saying who our guests are. I think the sophisticated and affluent travelers in the world, highly educated, they continue to look for more unique, immersive, authentic experiences. And this is what defines that expanded cross of category. It used to be that luxury was defined by amenities. I truly don't believe that's the case anymore. I think luxury is defined by something truly unique, authentic, memorable, fundamentally sort of life-altering experiences. And that's what our guests are looking for. And I'll tell you a little bit of a personal story. I and Rick, our CFO, had an fortunate opportunity to celebrate our 1-year anniversary with the company on board National Geographic Resolution in Antarctica. It's one of the most advanced expedition ships in the industry. And as we were standing on a bridge with Captain Martin and realizing that we were the southernmost passenger ship in the world for days at that point. And I was looking outside and was watching ships parked in the ice and our guests skiing with our expedition leader to the glacier, greeted by emperor penguins. I took an incredible pride of that moment because that's what defines our company, is that intimate community-like experience with like-minded travelers and naturalists. It's truly immersive and authentic experience of destinations. And whether you go to Greenland,
Natalia, thank you.
One of my favorite, the Galapagos.
Thank you, Natalia. We have to get going to the bell, but thank you so much for joining us, CEO of Lindblad Expeditions. Don't go anywhere. The opening bell is up next.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Morning on the floor of the New York Stock Exchange and up at the podium. The floor is covered in green for Sunbelt Rentals. They are celebrating listing on the New York Stock Exchange yesterday, and equities are open sharply lower this morning as the conflict in the Middle East intensifies. Brent crude oil hit $85 for the first time since July of 2024, and bonds fell. The U.S. closed 2 Gulf embassies following drone attacks, including one in Riyadh. It has urged Americans to leave the region now. And Secretary of State Marco Rubio said the next phase of the Iran war will, quote, be even more punishing, end quote. And in other news, NYSE-listed Czech giant Oracle acquired NetSuite, which dubbed itself the very first cloud company in 2016 in a deal worth over $9 billion. Today, Oracle NetSuite has evolved into an AI-powered, cloud-based enterprise resource planning platform. And I sat down with its founder, Evan Goldberg, to learn more about it. Take a listen.
It's a cloud-based service, as you said, that helps businesses with sort of everything they need to grow. Helps them with acquiring and growing customers and creating and delivering their products and services, managing their team, as well as optimizing their cash and profits. And we do it, as you said, for thousands of companies that range from startups and mom and pops all the way to companies doing hundreds of millions of dollars of business across so many different industries and around the world, whether you transact anywhere in the world or everywhere in the world.
So if I'm an Oracle NetSuite user, what am I getting? Does it differ from industry to industry?
Sure, because every business is different and every industry is different. So you may do inventory, sell products. We're great for that. You may sell a service. You may sell things over the internet. Any type of company, really, you need to manage your finances, your people, your operations, and that's what NetSuite can help you do.
And this week at Suite Connect, you are announcing new AI capabilities and products. Can you walk us through those?
Yeah, well, what we're really excited about is the next version of NetSuite called, of course, NetSuite Next. And that is a new version of NetSuite that's really centered around AI. And the way you interact with the system and what the system can do for you is revolutionized, giving you these incredible insights and having agents that can do work for you behind the scenes and letting you focus on what's most important.
And as companies are rushing to adapt AI, is it important to have everything in one system?
Yeah, well, I mean, just like I think everybody's familiar with trying to work with multiple systems and how everything is different, AI has trouble with that too. What does a sale mean in one system can be different. What does a customer mean in one system or another system can be different. So to get the best insights and to be able to automate workflows sort of across your business, having a single source of truth with all the data about your business, your finances, your people, your products, all in one place really leads to the best results.
And there is a big focus on enterprise AI. How is NetSuite helping mid-market and smaller companies adapt AI?
Yeah, and I mean, AI has even more promise for smaller companies. They don't even have people that are doing analysis, and they don't have people to handle, the complexities of some of these workflows. You have to be sort of a jack of all trades. So having AI be able to come in with this expertise and help you get the insights that you need to make great decisions about your business and help do the things that are manual so that you can focus on the things that are most important in your business. That has the most value really for these smaller companies.
And we're hearing so many different AI terms being thrown around. If somebody has a smaller company or mid-market company and they want to get started using AI, what is an easy entry point?
Yeah, well, that's what's great about NetSuite Next. The system that you're used to using, you just log in one day and you can turn on all these AI capabilities. Immediately you start talking to the system conversationally. Instead of pulling down menus and searching for things in lists, you really can just have a conversation with something called Ask Oracle inside of NetSuite Next. And you have agents that are doing things like helping you close your books or helping optimize your pricing, all these things that, an expertise can really help you do them best.
And you say that AI should be a natural extension of a business. Can you unpack that for us?
Well, it should be in the tools that you're using every day. It should be natural to converse with it, to interact with it. It should be able to do things behind the scenes. So when you log in the morning, it tells you, here's some insights that we've surfaced. It's really, think of it as a great coworker that can't do anything that you can't do. It's based on all the kind of trust and permissions that you have, but can do it 24 hours a day and can bring in a lot of expertise to help you operate your business the best way possible.
So what do you do to ensure accuracy and trust in your AI agents?
Well, one of the most important things is just to be able to explain it. So it's very easy when it gives you an answer to see how it came up with that answer. Just like you'd ask a coworker that gave you an answer and you're like, well, how did you reach that conclusion? And so, that transparency is incredibly important. And you can give it feedback. But it has access to the exact same tools that you would be using, manually. And so to that degree, because NetSuite is very accurate at delivering results, the AI agents are very accurate at delivering results.
Where do you see NetSuite in a year?
I see us, getting amazing feedback from our customers and continuing to improve. I mean, we're all learning. We're all on this journey to figure out what AI can do, and we're doing it with 43,000 customers. So their knowledge and our knowledge together should lead to some incredible results over the coming years.
And having that many customers, how do you gather feedback, and what is the general feedback that you get?
Yeah, well, I mean, certainly right within the system you can say, this answer was good, or I wasn't completely satisfied with that answer. And then we can use AI to analyze all of that data coming in to help us improve the system.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the Architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Lawmakers on Capitol Hill are in the spotlight early in 2026, from navigating economic uncertainty to uniting Americans through geopolitical conflicts. Joining me now is Congressman Dan Mauser. He represents the 9th District in Pennsylvania, and he's also the chairman of the House Financial Services Subcommittee on Oversight and Investigation. Welcome to the New York Stock Exchange.
Thank you, Ashley. Very nice to be with you.
So with the conflict in Iran going into its 4th day, what should Americans know?
Well, Americans should understand, first off, many of my Democrat colleagues like to say that this is not a legal use of the War Powers Act, which it absolutely 100% is. Secondly, Iran is a state of terrorism. Most of the terrorism that exists throughout our world, both here at home and from Hamas to Hezbollah throughout the Middle East, is funded and managed and orchestrated by Iran. Iran was offered a deal by President Trump. Stop your nuclear development and your uranium enrichment, or we're going to hurt you. We'll stop it for you. Iran refused. What's not so much known, in the last discussion, we actually offered to provide Iran with the necessary materials for energy production, nuclear energy production, not production for a bomb. Iran said no. So we clearly understood what their intent is. Their intent is to create a bomb and to be a terrorist nation, not just on other countries, but on their own. I received information this morning that it wasn't 30,000 people that were protesting were killed. It was over 90,000. Iran's a country with 93 million people. They murdered 93,000 of their citizens in the last 2 months. This is a rogue state, and because of that, along with the United States, certainly Israel, but the regional nations, President Trump did a great job building trust throughout the region in the Middle East. So Saudi Arabia, Bahrain, UAE, they're all Jordan, they all get it, they're all with us. They want this reign of terror to end, and that's what's taking place.
All right, and you said that given the conflict, lawmakers must agree immediately to fund the Department of Homeland Security. How urgent do you feel this is?
Well, it is. Let's face it. It's the Department of Homeland Security. That means our borders. That means certainly FEMA. It means TSA. It means our Coast Guard, which guards our coast. And yet the Democrats think it's a wonderful idea to keep that shut down. Okay? All that does is create danger, disruption. And unfortunately, many of us think that is my Democrat colleagues' goal, to help create chaos and blame it on President Trump, so somehow that helps them politically. This is serious business. We need to govern. We need to lead. We can't be playing politics. We need to open DHS back up. It needs to be done this week. We're bringing it to the House floor.
All right, and in February you introduced the Scam Act. What is that, and what impact can it have?
Well, the Scams Act was originally written by Bernie Moreno in the Senate. I took it up in the House because it fits perfectly with what we're trying to do, and that's fight consumer frauds and scams. And this will be a big help, and it focuses on social media companies. 25%, maybe even 35% of the scams originate off of social media. So what this is doing is it's requiring social media companies, if they hear about a report of a scam coming from one of their websites or sites, they need to shut it down or at least review it within 72 hours. If they don't, they could be held liable for the scams that are taking place. So it's a very serious bill that I think will have bipartisan support, and I'm very happy to be behind it.
And what will it require online platforms to do specifically?
To investigate it, review it, shut it down for 30 days. If they suspect that it is delivering fraud, so they got to give the benefit of the doubt that it is a fraudulent if reports came in, and then eliminate it if they find it to be the case.
What should Americans be cognizant of when it comes to online scams?
If it sounds too good to be true, it is. Do not respond to threats or requests. Get a phone number, make the call, have them return your call, verify before responding to such things as Easy Pass threats, where people are told your Easy Pass is overdue. If you don't pay X number of dollars, you're going to lose your license. Your bank would never text you and tell you need to provide them credit card or account information. Okay, go slow, take your time, make the phone calls, and ask for some family assistance if you're unsure.
Do you think that specific groups might be especially vulnerable, such as the elderly?
Yes, but all groups are. Young people, you name it. Some of these, they're very sophisticated. They're very good at tricking people. So it's certainly seniors. We do our best there to keep them educated as to what your bank would not ask for and what a scam artist would, to bring up those red flags. Some banks are doing it very well, some not as well. Some companies and websites, Google for instance, is doing a very good job. Some social media companies, popular ones, well-known ones, are not. So we need them all to come to a higher level, and because it's not just tens of billions of dollars, it could be $100 billion in scams and fraud that is being perpetrated on the American people.
Congressman Dan Mueser, thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley.
In late 2025, Endeavor Week brought together high-impact entrepreneurs, investors, and mentors from over 45 countries to New York City, with many also gathering right here at the NYSE. One of those leaders was Lucas Vargas. He is the chief executive at Brazil-based Nomad. He explains how his firm is helping break down borders across the fintech environment. You could take a listen.
The typical customer is the Brazilian upper middle class that historically has not had access to the same products and services that a private banking customer has. We do that by offering an FDIC insured bank account here in the US, KYC compliant. Basically, we work with partners here to make it a very easy and transparent and simple solution inside the Nomad ecosystem. We offer that FDIC insured bank account. We connect with other layers of infrastructure and products, a US issued debit card, payments, wire, ACH, some other solutions. And we also offer an investment account. We are a broker-dealer here in the US, so we also give access to stocks, ETFs, trades, fixed income, CDs, bonds, treasury, all that in a very easy, consolidated way for a Brazilian who lives in Brazil. And for us to do that, we also have to be compliant and to have a very simple and easy way for them to be onboarded from Brazil. So we bridge that gap by connecting infrastructure and compliance layers both in Brazil and in the US. And it's a very easy and seamless solution.
Would you say you're serving underserved areas?
Well, when we came to market in 2020, there was no solution like that. An easy way for you digitally to be onboarded instantly with your domestic document, right? There was nothing like that. But just like with B2C innovations, once you find an opportunity, if it really works, you're going to be seeing other competitors. So when we came to market, it was definitely one of a kind, the solution. Over time, we're seeing more and more with technology, with some other solutions. We're seeing that offer to start to expand. But when we came to market, we were definitely the first to offer that simple digital solution for Brazilians.
And I'm sure that fact speaks to your rapid and high growth. Can you talk more about that growth?
Of course. We launched in November 20, so about 5 years ago. When we launched Nomad, it was still the middle of the pandemic. So, and especially in Brazil, things were not good. Brazilians were not allowed to travel to many countries in the world. They couldn't go to Europe. Even the US was forcing a 15-day mandatory quarantine. So when we came to market in late 20, the international traveling was not happening. The reason why I say that is because we decided to go to market focusing on that specific use case. If you travel abroad, Nomad is going to be helping you, but no one was traveling for the first 12 months. We actually kept we were confident that after travel rebounded, we would be able to have a very good product. And it happened. So in November 20, when the US lifted that 15-day quarantine, it was when we saw the validation of the product. Fast forward 5 years, today we have close to 4 million customers. We just surpassed $100 million earlier this year in run rate revenue, started generating cash. We're growing over 100% year over year. So it's been a good 5 years for us, even though at times people don't see all of those bumps along the journey. First year really hard, but since then it looks like there has been validation and support for what we've been doing.
What sacrifices have you had to make as an entrepreneur to get this, to a successful place like you have?
Well, being an entrepreneur in Brazil, there are a few market conditions that you are already exposed to from the beginning. One of them is inflation. That's something that exists when we are raised with that. So having experienced from our early days the uncertainty of the market, those challenges, those are typical from an emerging market. I think those conditions, those market conditions, they actually shape the way we think, the way we behave. And because of that, we try to frame uncertainty and risk as opportunities. So in our case, in the Nomad case, when we thought about this opportunity, what we really wanted is let's establish a bank in the US. Let's build a bank in the US. And why can't the upper middle class has access to something like that? And of course, no one was supportive of such a not conventional idea. But I think that coming from emerging markets and having been raised in such an environment is something that helps us shape the way we think, the way we build our companies, and I think it's helped us. When we look back, I think it was part of our DNA.
Thanks, Nomad CEO Lucas Vargas, for that interview. And coming up, a Wall Street expert tells us what we should anticipate during today's session. Stay tuned.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Joining me now for a look at the markets is David Struzeski, CEO of Sound Planning Group. David, welcome to the New York Stock Exchange.
Pleasure to be here. Thanks so much.
Right, so given the conflict in Iran, are you altering your investment strategy? What is the plan?
I mean, we've been prepared for both bull markets and then as well as bear markets. I mean, this is what investing's all about, is understanding when to ride and when to tame them. And so right now, the Iran conflict is a big deal. Clearly, I think it's probably going to get settled out a little bit faster than what we've seen, like with the Russia war or what happened in Iraq many years ago. But we're seeing a lot of constraints right now with the oil, and obviously that's why the prices of oil are going through the roof. We were positioned in oil. That's an important commodity right now, something that a part of our thesis has been in play. What I've been ultimately doing, though, is I've been trimming some of my winners, both in AI as well as the Mag 7, and have been raising cash. And so what that's given me the ability to do is to have some dry powder for opportunities like this. But I don't think that we're completely done with the volatility. I think that there's a little bit more ahead, and ultimately that's what's going to position us very well here for the future, because we're likely in a little bit of a sideways market as opposed to just everything's buy and hold, park and pray, hope everything will be okay, and we can just ride the tide.
Historically, when conflicts break out overseas, how do the markets react? Do we see them rebound quickly, as you've been mentioning?
Yes and no. Certain parts of this are really important. Like, generally speaking, when war occurs, gold and silver ultimately go up. Now we're seeing them actually slipped here today, and so that's maybe a point we should talk about in a little bit, because silver is down almost 10%. But ultimately, they open up new opportunities, and so the world is changing. The way that we are transferring oil around the world is changing. This is why Venezuela was likely a really important idea here just a couple of weeks ago, and getting some of that oil. But drill baby drill economy is going to be producing more here at home, and ultimately I think that we can see, within a short time frame, things more stable, at least on the home front, as it relates to some of those important ways that most people are looking at them.
And the price of gold briefly touched 5,400 amid the conflict. How are you approaching gold and other commodities?
Well, gold and silver right now have been going up and up and up in value, which means it takes more US dollars to buy them. So as we continue to default on our debt by about $2 trillion a year, gold and silver are going to continue to rise. Where the real opportunity is that if you look at the sovereign banks, they're able to hold gold right now as a tier 1 asset. This is very important because the banks are looking for non-collateralized risk, non-third-party risk, and gold is that answer. But here's the reality. Silver is the most undervalued asset as far as commodities go in the world. And here's why. Because if you want NVIDIA chips, if you want data centers, if you want solar panels, you need silver. If you want Lockheed war missiles, you need silver. Silver is the connector of electricity, and this is the opportunity for silver to really break out right now. One underlying factor that most people aren't paying attention to today is the fact that silver, as far as the COMEX is concerned, has been redeemed. Futures contracts generally don't redeem more than 20%. They've been at 50 to 98% redemptions on a month-over-month basis. Literally half of the silver that we had in the COMEX has been dissolved, been taken since October. And so I believe that we're actually months, if not even weeks away from running out of silver in that futures market. So what happens at that point? Silver goes parabolic, goes through the roof. And so I think this is a gift of an opportunity, seeing it down here almost 10% today, especially in the midst of a wartime moment, which again, most times you buy gold and silver when you go to war, and at this moment right now, it's selling off. So I don't think that the price is actually reflective of the real value and the real scarcity in those asset classes here today.
And how are you advising clients given the latest developments overseas?
You know, when we look at the developments overseas, we have to ultimately understand that, you know, our economy is going to continue to go on. NVIDIA is still going to create chips. The AI data centers are going to still happen. But the challenges that we're going to be facing are in the constraints. And so oil prices go up. That could hit the pocketbook of the average American. That could be a really big problem as it relates to GDP. Because if 70% of GDP is the American public and what they have the ability to buy, then we're going to see places like Walmart and Target and others that are going to have greater opportunity because people are going to spend more thrifty, Dollar General, etc., and they're not going to be buying as many luxury items. So we could see some hiccups in what would be considered traditional buying habits, and I think that's really important. But you need to ride bulls and tame bears. I'd be a little bit more cautious right now as we move forward into the future.
All right, David Trzaski, thank you so much for joining us at the New York Stock Exchange. That is going to do it for today's coverage on NYSE Live. I'm Ashley Mastronardi. We'll see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?